For the general public, for those working families and people, why 2%? Why is getting it to 2% so important?
So that has become the globally agreed, essentially all major central banks target 2% inflation in one form or another.
How does that help my Nevada families? How does that help people in Nevada?
I'll tell you how it does. And it's I guess it's obviously not, it's not obvious how that is, but 2% inflation, to have people believe that inflation is going to go back to 2% really anchors inflation there, because the evidence is and the modern belief is that people's expectations about inflation actually have an effect on inflation. If you expect inflation to go up 5%, then it will. If everyone kind of expects that, because that's what businesses and households will be expecting, and it'll kind of happen because they expect it.
So here's the deal. Jerome Powell, the Fed chair, the maestro of money, the wizard of, we're not quite sure what, but he's out here trying to explain why inflation is like the secret sauce of the economy, yet it's about as clear as a mud bath. And speaking of inflation, it's creeping back like a nosy neighbor peering over your fence. But hold on, folks, because while the Fed's printing press might be working overtime, some folks are whispering that the Fed's piggy bank might be in the red. But wait, there's more, because picture this. A presidential candidate declares, "You're fired." No, not to Dennis Rodman or a reality show contestant, but to the entire Federal Reserve. It's like a political game of musical chairs, and the music stopped playing for the central bankers. Talk about based, we're going to show you that, but hold on to your seats, because could it be that all of this is shaping up for the grand moment that Bitcoin has been rehearsing for all these years? Are we witnessing the ultimate showdown between the hardest money ever created or discovered and the traditional financial titans? It's almost like the heavyweight championship match of the century, but Bitcoin's ready to throw down. So grab your popcorn, buckle up. Simply Bitcoin is on the air, and we get a lot to cover. Let's get it.
So, Larry, I think that we don't need 23,000 employees in the U.S. Federal Reserve to do that. Under my watch, I think we could have a 90% headcount reduction in that system, put the Fed back in its place, stabilize the dollar. That's what I say.
Well, yeah, in the Fed was good, but I gotta say, fire the Fed is right up there. It's a very close second, maybe a commingle. But I think you guys saw the recent CPI, 3.3%, 3.2%, whatever. The government is telling you that inflation is 3%. The Fed, the guy you just saw in the intro, can't explain why it is that they need inflation in the first place. But let's look at some other numbers here. Numbers that matter for you to live. So we got car insurance, that's up almost 18%, tax service 14, food 14, car repairs 13, fruits and veggies 12, bread 11. Yeah, looks like about 3% CPI, core, manufactured, state-created numbers. And let me just look at this. All right, sugar and sweets, that's good, because that stuff's bad for you. You need more protein. All right, eat more grass-fed beef. But the gaslighting of the public, again, the inflation thing is continued, the recession thing is continued, and just don't look behind the curtain. Don't look at the true obvious numbers right in front of our faces here, and just listen to the experts, guys. Trust the science. And this is just astounding. The Keynesians, I mean, they're really going hard at the money printer is on, because look at this. The U.S. government's debt is going to rise by 5.2 billion every single day for the next decade. And that's just now. That's saying they're not going to add other expenses and things in the future. Does the government ever cut anything? Monetary debasement is 100% certain. And if you're saving in dollars, you're trusting this guy who can't even describe inflation with your life savings. And there has been more news, because not only does it look like, the Fed's got problems, but there are lots of banks insolvent, and we're kind of hitting right back in this, 2008, kind of getting major deja vu here. But we have Moody's, and remember, The Big Short, you've seen them, they tried not to cut ratings like the best they can. They're a part of the whole thing. But Moody's has cut ratings of 10 banks and placed 6, including BNY Mellon, US Bancorp, State Street, and Truist Financial, on review for potential downgrades. Thought it was pretty fitting here. Chancellor on the brink of third bailout for banks. Bitcoin, it was built for this. This moment, everything happening right now is pointing you in one direction. Now, it's kind of funny as inflation continues to pick back up, and these people have been shown to be inept. What do? Do they hold themselves accountable? Of course not. The Fed decides to step up oversight of banks' involvement in custody, lending, and trading and issuance of quote-unquote crypto. And that's from the Board of Governors, Division of Supervision and Regulation, August 8th. So we can see, the Fed is fighting back. The Fed strikes back. Nico and Opti talked about this in detail the other day, but it is showing that they have nothing to stand on. Doesn't matter if it's a CBDC, doesn't matter. It is still inflationary. It is still going to steal from you. It is still a violation of privacy. It is still a mechanism of social control and behavioral economics, whereas Bitcoin is more on the constitutional republic side of things. A CBDC is on the authoritarian, full-blown North Korea communism type system, a social credit score system. And we're going to talk about more about that this week, but let's continue here. The great irony is the fact that these people are complete failures. They have stolen the savings from their own citizens, and we're going to crack down on the hardest, soundest money ever created rather than embrace it, which could help the U.S. maintain its prowess for the next, 1,000 years or something like that, instead of going the way of the Roman Empire. And more signs that they're getting desperate, because when the state is on its way out, when the state is being exposed, do they just quietly fade into the darkness? No, they usually double down and try to do everything to maintain their power, and also in this case, the monopoly on the money printer. But anyone who owns an LLC will be required to report names, addresses, birth dates, and tax identifier numbers of LLC members to FinCEN beginning next year, or face a $250,000 cuck-buck fine and up to 10 years in prison. That was from the National Law Review. We also have a link to an article from Marty Bent and Tales from the Crypt that really broke this down. Very good stuff. Be sure to check that out. And this is kind of going back to what Nico and Opti were talking about the other day. So make sure you check out that episode of Simply Bitcoin Live. Have that available for you below as well. But here we go. And this is the real story here. Government spending has largely supplanted the Fed's balance sheet contraction, and the impact of deficits can be elusive until they suddenly matter profoundly. And this is, gradually but suddenly. And I always describe inflation, at first it's these little cracks in a vase, and the vase is sitting there, and over time, maybe the pressure, those cracks start to spider web, and then eventually it explodes, and that's hyperinflation. And that's the contraction of cycles from monetary injection to their effect. And you can see that in Weimar, each injection, its effect dwindled, and the value of that currency, the rate of its debasement, picked up. And this relationship where you're kind of pinned in this corner, this death loop, that is the debt spiral. And that's where we're at. While there's nothing they can do to stop Bitcoin, there is also nothing they can do to stop this. They will be forced to print, and this next wave of monetary debasement could be even more intense than the one in 2020. And here we go. If you're out there, James, Greg, Lyn, Lawrence, Lyn kind of wrote an article on this we're going to break down, but asking the question, is the Fed officially broken out of money? The U.S. debt clock shows Treasury notes instead of Fed notes, and using real cash reserves from the Treasury. Question is, will the system crash soon? But yeah, this got me going, ask, is the Fed broke? And lo and behold, none other than Lyn Alden actually put together a piece on this. It is a very long piece, so I tried to snip out as much as possible some of the, get the real meat in this, but this full article will be down below, so be sure to check that out. Every time you read or listen to Lyn Alden, she will blow your mind. There are tons of charts, but let's get to this. So how did the Fed become unprofitable? In September 2022, the Fed began operating at a loss. This is because they had raised interest rates unusually quickly throughout the year, including on their own liabilities. Meanwhile, most of their assets are long duration, meaning that their various U.S. Treasuries and mortgage-backed securities are locked in at lower fixed-rate interest rates and don't adjust upwards. As a result, the Federal Reserve is now paying out more interest on its liabilities than it is earning on its assets. And she has this chart, this St. Louis Fed chart, shows the Federal Reserve's weekly remittances to the Treasury, and it looks very doomy. And again, guys, this article was from February 2023, so again, Lyn is well ahead, as usual, on calling these things and having the foresight. But way down here, there's more. So let's look at this part. So what happens when the Fed's tangible equity turns negative later in 2023? Lyn says nothing, at least not immediately. Unlike a commercial bank, a central bank can just keep functioning with negative equity and indefinite losses. Positive equity is just an imaginary line to preserve the idea of central bank independence and can be maintained with accounting gimmicks. It's like standing somewhere deep out in the wilderness, right on some unguarded part of the border between Canada and the US. The line might as well not even be there. Deferred assets are the modern equivalent of non-redeemable gold certificates. Or to quote Matthew McConaughey's character from Wolf of Wall Street, Fugazi, it's a wazi, it's a woozy, it's fairy dust. It doesn't exist. It's never landed. It's not matter. It's not in the elemental chart. It's not fucking real, all right? Okay, but seriously, what does it mean? The Federal Reserve's soon-to-be negative tangible net equity won't matter at first, and most people won't even notice. However, over the long term, this is actually somewhat relevant. And this was interesting here. The Treasury just lost $100 billion annual revenue. That might not sound like much these days, but it's about 4 times the size of NASA's annual budget. The federal government just lost 4 NASA's worth of income. Since spending likely won't be cut on anything to make up for this represents an extra $100 billion in debt that the Fed has to issue each year as long as this income source is gone. And by the end of the decade, Lyn has considerable concerns regarding a fiscal spiral, what we were talking about before, and we'll link another video on this, but in the US and other developed countries, meaning that a combination of high deficits, high debts, and high interest rates on those debts will all work together to create structural inflation and more money supply growth. In short, money printer go burr. And there you have it, folks. It's clear that the circus is in town. I mean, seriously, they want to steal your hard-earned cash while waving the banner of benefits, leaving us all wondering if we accidentally stumbled into some Orwellian nightmare. But fear not, because in the midst of this topsy-turvy spectacle, the hero has emerged, none other than Bitcoin, the digital disruptor that's rewriting the script. And while these clowns and bozos stumble over their own explanations, Bitcoin's here, the quiet revolution, reminding us that there's a better way. A way that doesn't involve sneaky sleights of hand or economic and mental gymnastics. Bitcoin is the escape hatch from their fiat funhouse, the exit sign from their financial maze. So next time you hear the blabbering about necessary theft and murky justifications about inflation, remember we've got a front row seat to the show they wish they could shut down. Bitcoin's the star of the new narrative, bringing about the bright orange free market future. And guys, for more on this, check out these episodes from me on Dell on why things are looking so bullish for Bitcoin amidst the fiat world macro uncertainty. And as the curtain falls on this episode of Simply, be sure to like, subscribe, and share the Sound Money Gospel, and keep tuning into Simply Bitcoin every day. Be sure to follow us on Twitter, and we will be your guide through the peaceful Bitcoin revolution. I'll catch you guys tomorrow. Peace.